You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning in to Mining Stock Education. In today's episode, you're going to be hearing from mining speculator, private investor, sophisticated investor, and newsletter writer, Brian Leni of JuniorStockReview.com. Brian's become a good friend, and I often bounce ideas off of Brian, potential investments, because I've really appreciated his diligent approach to speculating. And one resource that Brian came up with a few years ago or several years ago is the Diligent Speculator educational series in mining. Now, as a subscriber to Brian's service, I didn't realize that this was part of the package. But Brian told me to check it out, and I've been watching and going through some of Brian's tutorials and educational videos, which are really excellent if you are wanting to profit. You believe we're in a commodity bull cycle. You want to profit from mining stocks, but you don't come from a mining background like myself. You really need to devote yourself to learning this industry. You got to know the terminology. You got to know the basics of the deposit types and these technical aspects. You don't have to become so knowledgeable that you'd get hired in the mining sector, but you need to be able to understand the press release and at least talk the lingo. And so Brian put together a very good introductory video series that comes with his subscriber package. So Brian, I appreciated watching those. Thanks for putting it together. Welcome onto the show, but give us a little more color. What's the background of these videos? And I want listeners that don't know, you were an engineer and you didn't come from the mining background either. You're from Canada, so you're more in tune than the mining sector than I was before I got involved in this. But you were able to sell your house, multiply that money in 2016, and now you've been investing full-time as a result of it. So, how did this educational journey, how did that lead you into being able to leave your job and now be a full-time investor?
Sure. Thanks for having me, Bill. So as you said, I left my job in 2016, a job that I had done for about 10 years. And, that 10 years after school was a journey in itself. I was an engineer first, then got into management. And for me, I wasn't enjoying what I was doing was the bottom line. And so when I did do well, I did take that risk in 2013. I sold my house and I took the money and I put it into what I thought were the best junior miners. And when my portfolio went up in 2016, I took that opportunity to leave and to kind of go out on my own. And, the big thing is before, the mining stocks, and I put a lot of time into learning, but it didn't matter as much if I was right or wrong. This was sort of bonus money, I think, is the way I kind of looked at it. And it did change when I sold my house and I put, 2/3 of our net worth into the market. But I don't know if the reality was as clear as it was when I left my job and I was on my own. And so what I did is I thought to myself, I need to get even better at picking these stocks and understanding the market and generally just get fully engrossed in it. So I took all my notes from, the last, decade of investing, and I condensed them down into this, right now there's 5 modules in the video series. And I started off with geology and I narrowed it down to those specific things that I thought were the most important. And I executed and I made a video. And then I moved on to, the types of mineral deposits and the kind of grades and tonnages you should be looking at if you're going to be, a company's exploring for it. There's a module on exploration, some of the finer points on what to look for in an exploration program. So that kind of grew on itself. And I did those first things in 2017. And then I finished that up over the last kind of year and a half. And since I made this, Junior Stock Review Premium, I thought it would be a great addition for subscribers that wanted to, take their journey with me and learn more. And so, invariably, so they don't need me anymore. And I think that's ultimately where you want to be. You want to understand and make your own decisions. And there's never wrong with, looking for someone else's viewpoint. But I think ultimately to be the most successful, you need to have a certain level of education. And I think that this video series could go a long way into helping a lot of people.
So Brian, when you were working your job, and I'll just use this term and correct me if it's the wrong term, but mining stocks were more of a hobby before they were actually seen as a means to your financial freedom. Was there something that clicked to where you said, I'm going to be more diligent in my study because I see this end goal of financial freedom?
Definitely when I sold my house, like when the quantity of money goes up significantly, I think that it makes everybody kind of, look a little bit harder. But honestly, I think because I was still making a steady paycheck, it wasn't where it was supposed to be. It wasn't until, I was that week after I left my job and I'm sitting there and there isn't that paycheck coming into the bank the next week. And you really wake up, like I'm responsible for this and I'm responsible for my family. I had kids and it's something I wanted to, and I needed to focus on completely. And that hobby went into, a job or, it's not my sole focus, but my sole financial focus. And I've gotten compared to where I was to where I am today, I can't even put a number on it on how much better I am as an investor and a speculator. And I owe it to that hard work I've done. Now, in saying that, and I had mentioned to this in conversation to you before, there's a few people that I've had come into my life that I'm not sure I would be in my position I'm in today if I hadn't met them and they hadn't had that influence on me. And that's both from a life point of view and from a mining stock investor point of view. So, you can educate yourself a lot, but your network and the people you let influence you are that other component that maybe people forget about. And one last thing, you don't need to know these people personally for them to necessarily have a positive effect on you. So keep that in mind.
And so you can, learn from people via the internet or shows like this. Is that kind of what you're getting at?
Absolutely. Absolutely. And I think, one of the things that you're going to be, or people, especially in the junior sector, I think have to hone is their ability to find those people that are truthful, that are upfront and, are giving you are saying the right things and, the genuine is probably the best way to put it. And you find those kind of people and you see that they're in the position that you maybe want to be in the future and you listen to how they got there. And it's a great blueprint for you to get there.
Okay, Brian. So in 2016, when you made a lot of money and you sold your house, so now you're playing with 2/3 of your net worth and you've put it into junior mining stocks, high risk, high reward. You've made some money. What was your mentality in terms of harvesting that into realized gains? And what was your exit strategy? Because you were probably, I would assume, a little more anxious with that money. You're not already a multi-millionaire at that point. Tell us about it. Walk us through.
No, quite honestly, I'll be quite honest with you. I was forced to sell and I had to buy a house. There was a lot of stuff that needed to be done right off the hop when I left my job and to reestablish, because remember I did sell my house. So we didn't have anything, we were renting. And so I had to sell some big positions. Reservoir Minerals was a big winner for me. And that basically paid for a large portion of my house. And I had to cash those positions in. So in reality, I probably would have been more of a bag holder, you could have said. And I hadn't necessarily learned that in 2016, that I need to sell and I need to take profits off the table. I need to protect my downside risk. And that was probably one of the biggest things that's changed for me over the last 4 years, is being able to, separate myself a little bit from that, 10,000 foot view of the 10 bagger or, the multi-bagger type of mentality and say, okay, I make 30, 40%. I take that off the table. Doesn't mean I close the whole position, but I'm always either taking that into cash or I'm moving into some new opportunity. And that is really what's made me successful in the last couple of years, and successful, especially in the bear market where, 30, 40% is a great return in any market, really. But when you're in the bull, this is when these multi-baggers become more of a possibility. So yeah, I was forced into that, but then a mentor, especially, he definitely pointed me in the right direction, and following his guidance, has made a tremendous difference.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com. If there's a new mining speculator that's trying to really hit it out of the park in this upcycle here, how would you advise them regarding position sizing? I guess I'm more prone to the concentrated, bigger positions versus spreading your risk out among 30 different stocks that you have to keep track of. How do you view this? Are you going for grand slams and fewer stocks, or are you wanting to rack up the singles and doubles in 30 stocks?
My advice would be this: is you need to understand who you are and what you're able to actually deal with in the market, because it's going to go up and down. If you understand first kind of who you are and how you deal with emotion in the market, then I think you have a baseline for how you're going to construct your portfolio. If you're on the less risk side of things, you're probably going to be focusing more on the producers, the royalty and streaming companies, or the more advanced developers. And because of that, the amount of risk you're going to be taking is much lower, but your ability to have, those really big multi-baggers is probably a lot less. So your expectation has to be, a little bit less. Vice versa, there's going to be people that all they want to do is hit 10 baggers, and they're able to come to the realization that if you have that mentality and you're going to be at the far end of the risk pyramid, that you have to accept losers and wait for that big hit. And that means you probably have to have a larger portfolio size too, because we all know that, the chances of hitting like a really good, something that's going to become a mine, economic mineralization, the odds are quite low. So you need to have probably 20 picks in your portfolio to make those probabilities in your favor. Then there's probably people more like me that has a more of a balanced approach, where I want to take on risk. But a lot of, let's say my last pick that I made was Cartier Resources. In my view, Cartier is the reason why you invest in it, first and foremost, is because it's undervalued or its price is less than its value because of what they have. Chimo's deposit size, what that's worth if it's put into production. And then the balance to that is exploration at Benoit. So I'm able to take exploration risk, which has high upside potential, but my investment is underpinned by the value in the resource in Chimo, and I think it's a real deposit, something that could be a mine. So that's my balanced approach. And for me, I like to stay well under 20 stocks. And in the junior stock for premium portfolio right now, I believe we have 16 active positions. And I really like to keep that tight and concentrated into those positions. And anybody new to my letter, I would suggest you stick to the top 5 first, and then kind of branch out from there, as the rankings in the portfolio are always changing. So again, find out what you want to do with the market and what your risk tolerance is, and then you move your portfolio allocations accordingly.
Ryan, a question I've had for my own portfolio, and this would apply to accredited investors, is I've done more private companies, private placements, which for me as an American usually means, in this year anyway, I have to hold the stock for at least 7 months before I even have the ability to sell, because of this legend issue with U.S. investors investing in Canada. And then I have in the money warrants from private placements that are in the money. But all of this is very, very illiquid. Even with warrants, exercising them takes time. So if something happens, a market crash, I'm at the mercy of the market. I can't do anything. What's your advice to me in regards to illiquidity in a junior mining market? I'm assuming it's a bull market, but if I'm wrong, things aren't going to go well for me.
Yeah. So this is a very good position to be in, I think. When position size becomes a big part, and what I mean by this is that you're talking about, significant numbers of shares, becomes a big part of your decision, I think that's a really good position, an enviable position to be in. Second to that, yes, when you start getting into those large share blocks, that has to be a decision you make before you get into the placement, because, like you say, the liquidity of a company has to be in your favor to be able to liquidate those shares and actually realize the profits. So if you've got if you're buying into a small, let's say $20-30 million market cap company, and you want to take a significant position, one of the things you need to contemplate is, how am I going to get out? And in most cases, when you start talking about multiple thousands of dollars, tens of thousands of dollars, you are going to need a liquidity event, whether that's a really good Joe result, or that's going to be the second or a big leg of the bull market, where the interest in the public is focused in on your company. And the other thing is, you have to make a conscious effort in realizing what the marketing capabilities are of that junior that you're with. There's some companies that have really good drill intercepts, yet they still don't get recognition from the market, and you kind of wonder why. And so that has to be part of your decision making. Is, these are theoretical numbers, but if I'm looking at this company I really like, and I've got $100,000, am I actually going to be able to take that out? Whereas if I had, let's say I put in 20,000 or 25K into that private placement with those warrants, it's probably a lot easier for me to take that out, regardless if this company is able to market, they first do well, and then secondly, they're able to communicate that to the market, because the two kind of go hand in hand. So if you've got doubts on the marketing capability or the market's recognition of what that company is doing, then I suggest that you probably want to look on a smaller position size. The other side of it is, a lot of these big investors within this sector, they make big bets, and their big bets are ultimately end with probably an acquisition. And again, if you're going to make a decision like that, you better be really sure you're in the right company. And that's why, again, how we started off our conversation, that's where your education comes, into a lot of importance. And you have to be with the right people, so that, if you've got $500,000 in a position, you're actually going to be able to take it out, because you can be right, but not be able to liquidate that position. And that's a big issue.
Yep. And if you're listening to us and you want to be part of the success and the success stories that this commodity bull cycle produces, hopefully this conversation was inspirational to you. Just envision the financial freedom, envision your goals, and from there, work back. And if you're having a hard time devoting yourself to studying and becoming a better speculator, it all starts with that vision and that end goal that you're aiming to get. Well, Brian, really appreciate you having this discussion with me. You have a great resource. And so if people want to learn more, where do they go?
JuniorStockReview.com, and the Diligent Speculator video series is available only for the yearly subscription, just to make that clear. But yeah, you'll see the navigation on the homepage. And thank you very much for having me, Bill.
Excellent. We'll be talking to you in a month.